Okay. Okay, so good afternoon. Happy to see you visiting our website. So I decided to make this video much shorter. You will see that in this place I was thinking to put our 30 minutes presentation about Kahn Capital. However, I decided to make this video that is going to be short and simplified. I'm going to just say what I said there, but simplifying it and making a more easy, short, and clear message. Just like talking to a friend. And the previous video where we had some issues with the camera. If you swipe, you're gonna have access to that other video. However, it's still in process of being edited, remade. I'm gonna make a remake of it and hiring a spokesperson or someone that has better communication skills than what I have. So today we're gonna speak a little bit about the same things, but more simplified. We're gonna talk about the importance of partnerships and the importance of how to behave when you meet people that really can make your money grow. This business is very simple. What we do is we sell money. We are simply people that start managing money and have good returns, and then we decide to share these skill we have with other people. What's the catch? The catch is that we want to buy more. We don't have enough cash yet to buy all the liquidity available in the investments we like. So we like to share these ideas and give the opportunity to other people to produce great returns. But what's the important thing? The important thing is to simplify this so you can see it as it is. So at the end, hedge funds, it's not so complicated as we might think about it. Some people think that's like a big company that you have to apply and do so many forms and these and that. And at the end, it's very simple. Sometimes it's just people who knows how to manage money very well. Imagine that your brother, your sister, an old college buddy or your friend from high school nowadays is very good managing money. So what happens? People that know each other and trust each other or simply sell to each other the idea of investing decide to go into a partnership. And they raise money to a pool, they generate two documents, the operating agreement and all the rules about when to withdraw, when to, how to divide the money, what's the lockup, so many things that have to be discussed and agreed on. But the basic thing is that you go into a partnership with something. If you see the previous video, we were talking about LPs and GPs, okay? I'm not going to dive into that because I want to make this video short and make it very clear. But basically, in simple words, Kahn Capital started as a partnership. Every interesting fund started many times, if not most of the times, as a partnership. It's simply a person that knows the principles, the way to invest wisely, to make savvy investments. They have an approach to investments which is producing high returns, okay? And they simply share it with other people. They generate partnerships, and together they go and invest in this strategy, buying these type of assets that are included in this strategy. If it's a good strategy, often it's a diversified strategy. So you really need to pool the money and then go and buy all the things you want to buy. It's not as simple as asking what you are investing on and then this person goes and in his brokerage account and invests in it and then the other person does the same. No. Really, what you want to buy is a basket of assets, sometimes many. So you put the money into a partnership, and then the GP, the general partner, goes and invests the money in the stock market. Sometimes, if you include real estate, he makes the real estate deal, whatever, right? The GPs could be more than one person, okay? But it's the person behind the decision. So that's the key, partnerships. You just go into partnerships with people. And it is as simple as that. That's the secret. It's not so complicated. So what is the quality that makes a partnership, for example, like Kahn Capital, as our case, extremely valuable. Okay? I'm going to use some examples of my book. I'm not going to make more promotion of my book. I think I already did enough of that in the previous video, but we're going to use some parts of my book to support my point so you understand, okay? So, what is something that makes a partnership that you can find out there extremely valuable? Something that you should really respect, that you should really be careful when you find this, because you are one step away of making the biggest mistake in your life in matters of losing the chance of winning, okay? So what makes a partnership extremely valuable is when they have the intention, the capacity, they are willing to stay in business for the next 40 years, 20 years. It's really a long-term relationship what you're finding there. Some partnerships, perhaps they have strategies that are based in momentum and some type of stocks that are appearing right now. Other partnerships, other funds like Kahn Capital, we have a strategy in place which has existed since the beginning of times, and we estimate is going to continue existing for the next 100 years, which is undervalued businesses. Always there was undervalued businesses out there. Nowadays there's more than ever, perhaps, because there's so many people simply cannot focus in all of them, right? So people and businesses and institutions. So the thing that makes extremely valuable the partnerships is the fact that they are planning to stay in business for 40 years and stay in business with you. Sometimes for 20 years, but let's say you let your money roll for 20 years and then you make a rollover into another fund after 20 years. You just have to transfer the money. You have to do that job. But the important thing is that they want to stay in business for more than 20 years. And I will tell you why. Because if a fund is wanting to invest for more than 20 years and compound returns, and they are making more than 40% a year, it's extremely powerful. Especially in our case, where we made much more than 50% without leverage, okay? And let me tell you why. If you check my book, I'm not going to promote it. As I told you, I already promoted a lot in the previous video, but we're going to use it, okay, to understand some things. So, for example, if you started in 2023 and you invested $10,000, and in average you compound at 40% a year, after 20 years, only after 20, $10,000 become, in 2043, $25,795,530.43. You can check it with your calculator. Doing 48% a year consistently. 48. So leaving $10,000 with those guys into that partnership can be extremely powerful, my friend. Just 10,000. And the thing is that if you are lucky that you can make a bigger investment, let's say you go for 200,000, the first year you go for 40% return, and then you withdraw, your $80,000 profit, okay? If you did 40%, less taxes, let's say you recover your 200,000, you take it to other place, you invest it in bonds because you're a boring person, okay? So then this $80,000, you grab $10,000 after tax, and you reinvest it in the fund, and you leave it there. You just forget about it, and then you wake up 20 years later, and you realize that those $10,000, which you put there for free because you took it from here, after 25 years or 20 years, is more than 25 million. So what I'm trying to say is that what makes a partnership extremely valuable is the fact that they are willing to stay in business for more than 20 years, 30, 40 years, 50 years like Warren Buffett did, more than 50 years, that guy doesn't retire, he's still working, right? So when you find a fund that makes over 40% a year, that is willing to stay in business for more than 20 years, be very kind with that people. And if you don't have the bravery of going and depositing a huge amount of money, just try to put 10K with those guys, 5K, 4K, just let it roll, And this is a very important message, And to simplify it, imagine that your brother, your sister, wherever, your friend from high school discovered that he's very good at managing money, he's doing a good return. Just start a partnership with him. It's so simple as that, right? Buy money. Go ahead and buy the money. Don't stay frozen. And I don't want to make this video too long. The idea of this was to make it shorter. If you can swipe to the right and see the 30 minutes presentation I was making, in the future I'm going to improve it and make it better. But this is the message basically. And in Kahn Capital, we take in those two things. First, we are making more than 40% a year. If you see my presentation, we are the last 2023 to 2024, we made 76.3% with no leverage, okay? And then the second thing we tick the box at is that we want to stay in business for more than 20 years, maybe for a lifetime. One of the projects we have here in Kahn Capital is the following. If someone makes a big investment like this, okay, and we make you a lot of money, okay, let's say we make you even more, we make you 50%, okay, and you go out with 100%, $100,000, okay, in profits. I don't know how much it's going to be that after tax, but when you make that amount of money, one thing we will love to do is that you give us a $10,000 tip. And I will tell you for what. Like, the idea is that from here we generate a $10,000 tip. And what we think is that we don't only want to make something long-term, we want to be a cool company. We want to be a company that people want to work for. And for that, we have to find a purpose. We have to do cool things. We have to give meaning to what we do. So if someone tips us $10,000, then this is an idea I had one time. Every person is unique. In what it's unique? In the things they like to help. Every person is born in different towns usually, or different countries. So you have a charity, you have a place that you really want to help, and that's something unique that only you have in your heart. And if you don't help them, nobody's gonna help them. So after you give your tip, because we made you money, we made you way above those 10,000, you can assign a charity that you want to support, and then we grow this money for 30 years, and after those 30 years, those 10,000 could be millions, and we donate that money to, I don't know, grandson number 5 for his college. Or if it's not your grandson for college, it's going to be for, I don't know, building schools in your hometown, for feeding people if your country is really having an alimentary crisis, there's no food, or alleviating war, whatever is going on in those places you want to help. You put that money that we made you, and you assign a special charity you want to donate it to, and after we grow that money, we give it away for you. And I think this is very good to make Kahn Capital a long-term mission, which benefits clients, benefits charities, benefits ourselves, because we become more valuable, we become a better offer for you. Okay, I think the fact that we make you so much money is already good enough. However, that's an extra I was thinking for Kahn Capital. And I think this is a very good introduction if it's the first time you're visiting our website, okay? So I hope you liked the video. And I wish you all the best. Thank you for visiting me. Thank you for listening to me. And now if you want, you can go and watch the longer presentation I did. You know, it's a little bit messy. I'm thinking in remaking it. We had some issues with the camera and all of that, but I hope I did a better job today. So I hope you like this. And yeah, remember, if you know people that's really making good returns, make it simple, man. Go into a partnership with them. Put 2K, 5K, whatever you can, man, and let it roll. You will be surprised. If that people is willing to keep investing for 30, 40 years, you have a jackpot there. You have your retirement. So don't let the opportunity pass by. Just make it simple, And yeah, thank you for watching. And yeah, remember to go check out my book if you really like this subject. In chapter 3, we have a lot of information about what we are doing, what is the principles we are following, okay? You don't only have examples of compound interest, you really have information of which principles we are following at the time of investing, okay? More than 18 principles that we are following, so you really have a grasp of which type of assets we are investing on and which type of assets you're gonna be buying, okay? Which type of stocks. We are still not diversifying with real estate. We are buying some stocks of companies who own real estate and grow by making real estate deals, but we are not buying real estate, okay? That's low return. Sometimes it's extremely boring and low return. So, that have the common sense of doing your due diligence, checking what people is investing on. We are not going to hide it. You can read our last letter to investors to really have an idea which countries we're choosing. But then, first common sense thing, when you find someone that can do high returns, just go into a partnership. Make it simple. It's not so complicated, man. It's just paperwork. Yes, you have to put a good amount of money so the lawyers and the fees don't create a downside too big. But yeah, it's so simple as that. Go into a partnership. And second common sense thing, don't think it's as simple as asking. I apologize for that. So simple as asking what you're investing on. It doesn't work like that. They are not going to tell you for free. And as I explained in my other video, it's longer, it's harmful for the fund and for the clients to tell you what they are investing on. They want to buy cheap, so they don't want to create hype around the stock and having to end up buying more expensive. If you don't tell what you're investing on, unless you are shorting, in that case you want to tell people you are short something, but when you are buying something long, you want to avoid saying it, so you have more time to raise capital and put more money into those ideas at the highest discount possible. Sometimes could be extremely harmful to don't maximize the discount, because discounts is great. Discounts is the chance to maybe in 2 weeks, 3 weeks, resell that stock 10%, 20% up, without even having to hold it long. If you don't look for the discount, then you convert a 20% return in few months into a long-term bet, because you bought it more expensive, therefore you really need to wait for the business to grow, so it really goes above the entry price you paid. So second common sense rule, don't think it's as easy as asking them what you're investing on. They're not going to tell you. So go and join those partnerships. It's as simple as that. It's not like a very prestigious hedge fund that you really have to do a lot of paperwork, or these boring, famous hedge funds that are only making 20% a year, those guys have low returns because they are half compliance centers. They have teams of lawyers there that have no idea how to invest and are really just trying to comply with all the rules and all the regulations, of being in a company and all of that. Partnerships are much simpler. So just go and join a partnership. It's a much better way of growing your money. And yeah, that's it. So summarizing again, the highest value we have to offer and the highest value that you will find in any partnership you can find is if the people behind the partnership is willing to stay in business for 20, 30, 40 years. Remember that. That's very important. If you see that in an opportunity, be very careful. Treat those guys with extreme respect and be very kind. If you cannot put a lot of money there, just put 5K, 10K, because they can do wonders if they're going to stay in business that long. Okay, so thank you very much for watching. Wish you all the best, and thank you for visiting our website here in Kahn Capital. I hope to hear from you soon. You can call me. You have the phone number in some area of the website if we didn't take it out yet, or you can just email me. You have my email in the next video. So thank you for watching, and all the best. Blessings.